sometimes price will weak beyond my POI, then another loss, but I'm in the right direction. Please, what do you advise I do?
All right, so if I get your question correct, your question is you do mark your POI correct. Sometimes price retracts from your POI, sometimes price doesn't really get into your POI and then gives a
Yes.
reaction that you get to miss your trade, right?
Yes.
Okay, so let me explain that a little bit. So okay, I'm about to mute you now.
Okay.
Okay. All right, so let me answer his question real fast so we could go on to the next person, okay? So for those of you who are just joining, this is a free live section. When I'm done with this question, I'm going to be asking another question, and anyone from the audience can raise up their hand, and I will pick you, and we will try to tackle your question together. All right, so if I can answer the question, I would ask the audience, and anyone can raise up their own hands to also help answer the question. So for this particular question, let me give some tips that could also help in that field. All right. So now let's say we have a POI. Let me use an already backplane to POI. Let's say for the 4 hour time frame. So normally we know we have two types of reactions, right? So let me explain that to you. Number one, the first reaction is price getting into your POI, causing the manipulation, clearing out the liquidity, okay? And then we see price breaking structure to the upside, giving us a change of character, right? So we want to see price create an inducement for the POI below. So this inducement is going to be hanging above a fair value gap, which is going to be within this particular range, which was formed. So the high which broke structure, which cleared the previous high, which created it, making this a strong high, all right, is now the weak high. So everything within this newly formed range would be known as liquidity. All right, so we want to see price react from clearing out this liquidity. So this is our aim. We're using liquidity-based logic now on order flow. We're not using the structure, we're just using the range, right? We just understand that this is a proper bullish structure, which you have the change of character from here. And we want to see this, right? So we expect more of this. But understanding the range and understanding how order flow works and understanding the concept of liquidity, we also know that this is an internal range liquidity, right? This is an internal range liquidity resting within the range, which is also above a fair value gap. So there's every possibility that price will be returning either to fill the 50% of this fair value gap, or price will return to fill the 100% of this fair value gap. Okay, so these are two different possibilities. So now how do we know which to pick? Actually, we don't know. What we do know is that price is going to be clearing out this internal range. Right, so what do is we observe the reaction from this particular point. Right, so if price clears out the liquidity and forms this entire pattern, right, again at this particular point, this gives us a higher possibility. Guys, confirm if you can hear anything. Someone say you can't really hear anything. Wilson, I'm about to unmute you, so you can unmute yourself and confirm if I'm audible, okay? Am I audible? Can you guys hear me?
The audio is good.
All right, so I guess the problem is from him then.
The only problem is still working, so I cannot even pay attention.
all right. Let me continue then. Okay, so back to this. Now we understand that price action has given us this same reaction from this point, right? And is also happening on the lower time frame at this same point. So which gives us a higher possibility that price will be going up from here. Okay, so we don't actually know if it's going to be doing this or if it's going to be doing this. So my advice to you to try and solve your problem of price reacting without going into your POI is trying to observe the order flow at the lower time frame structure of this point. Your key focus should be price clearing out this liquidity. I won't lie, multiple students from my mentorship group has asked me a question. Which one of them is actually on this live section right now? Emmanuel, he had this problem and he asked me, multiple times price came into his POI and then gave a reaction. And sometimes price returns and clears out the liquidity without mitigating his POI. And sometimes price actually clears liquidity, mitigate the POI, but doesn't give a confirmation entry. So how do we solve this? So first of all, you have to understand the liquidity is what they're after. They don't really care about the demand zone which we see. That's just a single candle, which is the logic we are using. That doesn't mean that they are seeing the demand zone. They're after your stop hunts. Okay, so if stop hunts are resting below this point here, that means this is their target, not this. They could react from this if they have, the money which they use in doing the manipulation, which we know is smart money concept, right? But then they could also leave those money and then, stop guys out, which is the same thing as a stop hunt. Okay, so they could decide not to do a mitigation and do a stop hunt. So you have to be very, very sharp and observant of this particular point. Now, how do you solve that problem of price returning into your POI and not giving you a confirmation entry? Which is simple as well, because now you have to understand where this is where refining comes in. What like I tell my guys, if my stop hunt is above 20%, I always wait for a reaction. Sorry, 20 pips, 20 pips. If my stop loss is below 20 pips, I always wait for reaction because I can't risk, above 20 pips. So I always use 20 pips stop loss as my max. So let's say if I have a POI, which placing my entry at this point, and my stop loss at this low would be a 15 pips, a 10 pips, a 5 pips SL. I'd rather do the, aggressive and risk that 15 pips, just in case. But if this is around 30 to 50 pips, I could probably wait for a reaction and see what price wants to do from this particular point. Okay? So this is how this works, and that's how I actually have been, handling this particular situation. So any other question? I hope this has helped you a lot. Who was that? MD. Hope this has helped you a lot to answer your question. Okay, so let's move over to the next question. We just tackled
Yes,
one.
thank you. Thank you very much.
Yeah, you're welcome, bro. You're welcome. All right, so who else? Can I see your hands so I could pick anyone to ask the next question? All right, so we have um, a dash. If you're live, you're now allowed to speak. You can unmute yourself now. Pandey, I think his name is Adash
Hello.
Pandey, right? Hello,
Hello.
bro. Hello.
How are you?
I'm okay. I'm okay. How you doing, bro?
I'm good.
So what's the question
Can
for today?
can you help me about GBP JPY recovery? Any updates?
What?
Any update you have GBP JPY recovery?
No current updates. I'm not. Today is the last day for analysis, so I won't be sending any further analysis or doing any further analysis on GBP or any other pair till next day. Just
Okay.
educative contents for now.
Thank you. Thank you.
Sure. All right. So about to mute you. Any other person? ASAP. I'll go. I'm about to mute you now, so you could ask a question. ASAP. I'll go. You're live. Allowed to speak now. You can speak now, bro.
Good evening.
Yeah. Good evening, bro. Good evening.
Thanks for giving me this opportunity. I hope my question would help others. All right,
You're
this
most
is my
welcome.
question. Please, do you use cycles in trading?
Do I use what?
Cycles. The 90-minute cycle, 3-hour cycle, so that's the doubling cycle. A doubling theory.
I don't really understand. What did you say? Do I use what?
A doubling
Cycle?
theory. That's cycles, yes. 90-minute cycle, 3-hour, 6 and 12.
No, I just use the time frames. I just use the multiple time frames. I'm not really sure I understand what you mean by cycles. But I don't know if you mean time frames. If you mean the multiple time frames,
Not
I do.
time
But
frames, not time frames, but the
outside,
I said not time frame. ICT's well, I don't know. He calls it enigma.
Ligma. No, I don't use that. I don't use that. I don't use that.
Okay. Okay. Fine. Thanks.
Oh, sure. So, someone else? Anyone? Raise up your hand. A question related to SMC, Wyckoff, or Elliott Wave, please. Anything outside what I trade on my Telegram channel, I can't actually answer that. Okay, so please let's keep it simple and try to help me out as well. So Jeff, I'm about to unmute you now. You can ask your question. Okay.
Can you hear me?
Yeah, I can hear you, bro. Good day.
Okay, thank you. Thank you for giving me this opportunity.
Yeah, you're welcome, bro. You're welcome.
So, when I trade, right, I was taught to start from a higher time frame, correct?
Yep.
So, my problem is that I will start with the monthly time frame, and I'll find like a BOS and a POI, but it'll take months for price to come back to that POI. So my question is, how do I find my trading range on a lower time frame?
Yeah, I get your question. I get your question. Okay, so let me help you out here. When they say you trade from your higher time frame, right, it doesn't mean you have to necessarily be looking for exactly the same thing you look for on the daily. That's the same thing you should be looking for on the weekly. Or that doesn't mean that's the same thing you should be looking for on the 4 hour time frame, or what you should be looking for on the 1 minute time frame. You're looking for different things, all right? So you have to understand which time frame you're coming from and what you want to see. Now, for example, the monthly time frame is known as the mother time frame, right? So this time frame actually tells you what is going to be happening. Right? This time frame tells you which zone is strong and which zone is weak. Okay, so the
Yeah.
monthly time frame only helps you to give you which part of structure is currently being mitigated, like premium or discount. Like right now, we know this is a newly formed range because we see the book structure here, right? So you see the break of
Yeah.
structure here, and then we saw
Yes.
the mitigation here because it never broke this high. So we have like a bear with structure, right? So what is price doing? Price is returning into discount. Okay. So on the monthly time frame, where are the significant zones where price can react from? Where are the significant zones which gave a positive reaction within the range? Now, what I'm asking is not actually a POI, but we have to actually look for a POI on the lower time frame. So this is what I look for on the monthly. I not actually look for a POI because if you pick a POI and a liquidity and all that on the monthly time frame, it will take months for price to get in there. All right. So what I do is that I try to make sure I pick those zones. Like you see, this is a resistance zone, right? I know this is not really SMC, but do pay attention, okay? So we know this is a
Yes, sir.
resistance zone. It's at the monthly time frame, right? And then we also have one here as well, which is right here. But so what do we see support and resistance as? We see them as liquidity, right? So we do know a lot of traders are paying attention to this point and also paying attention to this point. So what are the significant points where an SMC trader is supposed to be looking for within these particular zones? We see we have a hidden base at this point, right? So that
Yeah.
means that point is a significant point we should also observe because one, it's also within premium, and we are in a bearish structure. And we know price could return into the 50% of premium and head back down, or go to the extreme and head back down. What we do know is that they're looking for liquidity within this range. And we know this point and this point is a really significant liquidity zone. All right, so this is where you look for the monthly time frame, not actually your POY and your breakup structure. So now, once you understand that on the monthly time frame, you go down to the weekly. Right, so on the weekly time frame, what do you see? Using the data you got from the monthly, you see this is really a strong resistance or support or a key zone, whichever you want to call it. But then what do you see within the range? What do you see within the range? You see we had a high, which took out the low, which created it, right? So we see a smaller structure, which was formed around the same key zone, which the monthly gave us. So what do we see from here? We see an IPA candle resting right here, beautiful IPA candle, or you could see another block, whichever you want to call it. We see that resting right here. We could mark the IPA candle, we could mark the forward block, whichever you want to call it, all right? So now, once we see that, what do we see as well? We see internal range liquidity. So we know these are weekly with liquidity zones, which wise could actually be heading for. So this is an internal range liquidity we see right here because it's within this range and it's a swing high, right? If you want to know why I call that a swing high, on the daily time frame, you're going to be seeing like this. So you see, it's a smaller structure, which is actually the internal range of this major weekly structure. Okay, so these are internal range liquidity. All right, so now what does the monthly data help you to understand? That this is liquidity and this is also resting at the monthly zone. This is how you do your key analysis from different time frames. All right, so this is how you get to understand the data which each time frame is trying to present to you. All right, so now once you understand this, you know you have these points of interest for observation. Let me delete this so it doesn't look too. That's okay. So you have this point for observation, and you also have this fair value gap resting right there. So now this becomes a point of interest, right? So this whole order block becomes a point of interest. Okay, from the weekly. Now, what else do you want to see? You want to see a more refined zone because this could be a very, very big, SL if you decide to wait for price. Just place an entry here and your SL above here. So now we go to the daily time frame. What do we see? We see this as internal range liquidity, and then the fair value gap. This is a demand zone, right? So now you want to come back. You want to return back to this particular structure because remember this is still far away, and this is what we have on the present structure. So now go back to the monthly structure and observe what this structure is doing. Where at the significant points within this range, your price could be going bullish from. Is there anything? We have this, which is more like a monthly fair value gap. So we could see something like this. All right? So now we go back to the weekly and observe the same structure if we see anything important at that point. We see this IPA candle. On the daily, would be looking more nice, but on the weekly, we can refine that to this. Okay, which we have this. And we have this point as a point of interest, right? And this as an inducement. Okay, so now this whole thing can get refined to understanding what each range is trying to do. Right, so this I just did is what you do on the monthly and the weekly, then down to the daily. I didn't go down to the 4 hour, the 1 hour, or the 45-minute time frame because that's what we'll be teaching. That's kind of like a topic on the upcoming bootcamp. Right, so if I give you the full details, that's like giving you a free bootcamp training. I don't know if you understand what I mean.
Yes, sir, I understand. Thank you.
So from this, you understand what you have to look for in the higher time frame, and when you go to the lower time frame, you want to see the refining. All right, you want to look for this. You want to look for POIs or reactions within this zone, because now this is your key zone, which you got from the higher time frame. This point, and then also this point. Remember what I said about the first topic, which I explained. You're not looking at the POI. You're looking at the liquidity. As you can see here, price cleared at the liquidity, but did not really mitigate the POI. So if you had pay attention at this point, maybe, just maybe, once you saw price clearing at that liquidity, you would have gotten a clean entry from this point because you can see clearly price did give an opportunity. Price did give an opportunity right here because you can see this was clearly a change of character. Look at this structure. You see this was formed by this guy. Then this guy from this guy, which failed to clear this high just a stop point, and then gave a break of structure. So properly looking at this, could have had this. Giving yourself 15 pips, 12 pips, 10 pips SL above this high. You could have waited that price would mitigate this full IPA candle. Have this stuff like this. You would have still been in profit. And you could have that even more refined if you want. But this is what structure gave you after price cleared that liquidity. Okay, so it's important to go to the lower time frame to understand what this structure is doing entirely. and also what to look for on the 45 minutes, 30 minutes, 15 minutes, or 5 minute time frame. Okay.
Yes, sir.
All right. So that will be all on that particular question. All right. So you could
Yes,
find more
sir.
about this SMC approach using the PDF file on the free channel. Okay.
Okay, thank you.
You're welcome, bro. You're welcome. So I'm about to pick someone else. Anyone? Let's say two more questions, and then that'll be all. All right. So we have fax or FX. Is it FX? FX Chief. I'm about to unmute you now. Please ask your question, okay? You're free to speak.
Can you hear me now, sir? Hello, can you hear me, sir?
Yeah, I can hear you. I can hear you. So what?
All right.
I can hear you. I can hear you loud and clear.
Good evening.
Hello.
Good
Good
evening.
evening. Good evening. What's your question?
Okay, my
Good
question is
evening.
that how do we merge the analysis on the XY, that's US dollar index, with other US dollar pairs and then trade it?
I don't understand. Can you come again?
Okay, like how do we analyze US dollar index and then match the analysis with the US dollar pairs?
Oh, you mean the correlation between DXY and USD related pairs?
Yes.
Okay, so let me explain that. I don't know much about that because I don't really use that, but let me explain the little I know, okay? So now we understand that if Euro USD is on an uptrend, it's likely that DXY would be on a downtrend, right? Because we know DXY represents USD, right? And Euro USD is like a correlation between Euro USD. So is the code and the base of USD and that's just USD related. Now Euro USD, let's say EU, this is EU X Y. This is being driven by just the USD, which is the U on EU. EU is like the opposite because being the base means the USD is weak, Euro USD would be bullish. Okay, so I think there was a way which we could have done that, and this applies to multiple other pairs too, not just Euro USD as well. Now you have USD card. USD card is kind of like going in the same direction as DXY because DXY is actually the code of that particular pair, code of the base, something like that. So if you can understand what the structure on Euro USD, if you can understand the structure of this, I think there was a button here which you can do some comparison. I don't know if that is still possible. Okay, so I don't think that's possible again. But there was a way we could have done some comparison and there would let us, import DXY on this particular pair. Now, looking at DXY, what do you see? You see something similar because they're both ranging right now. So this is DXY. You see US dollar index. If you understand that US dollar is bearish, this is bearish, then there's a high tendency that Euro USD would be going bullish anytime soon. As you can see, the structure of this, the order flow of this is kind of looking, bullish right here. You see? So something like this is also possible. But then this is just filling just the 50% of the fair value gap. So we can still see something like this going back up. And then on DXY, what do we see? for some better understanding. We know this is a very long season to actually be trading right now because we're closer to the holidays. So you can see how this is messing up with the chart. We see price cleared at liquidity, like structure. This is internal range structure, and we had a break of structure here. So there's every tendency the price could be rising from this hitting base and then going back down. So Euro USD, we have this. So there's every tendency we could see something like this, right? So which means DXY actually confirms this because DXY is showing that it's going to go bearish. And this is showing that there's every chance that we could be going bullish. So this is how I actually use this. I don't know. This is for me. All right. I don't know the methods which other people use it, but this is how I actually use mine. Same thing for GBP USD. GBP USD is actually the base. So USD controls the pair. So if DXY is weak, I'm expecting GBP USD to be bullish. Same thing goes for gold. But the pairs which has USD as the code, I'm expecting them to be bullish when DXY is bullish because they're supposed to be going in line with each other because USD is actually the one in charge of that particular pair. So this is how I use DXY on my pairs. Sometimes, not most all the time because I don't really use that. But when I'm using it, this is how I use it. Okay. So
All right. I
is that
understand
clear?
that. Yeah, it's clear. Thank you.
Yeah. So no worries, no worries. So moving to the next question, please wave your hand if you want to ask a question. Um, Joa, do you have a question? I'm about to mute you. If you can't, if you don't speak in a few minutes, I would have to, pick someone else. So what's your question for today, bro? Joa, you can now speak. Okay, so I guess it's not active. I'm about to pick Winnie Sniper. You can now speak. What's your
Yeah,
question, bro?
hello Jay.
Hello, bro. How are you doing?
I'm fine. I'm from Kenya.
Nice meeting you, bro. I'm from Nigeria.
Yeah, so I wanted to ask on today you sent a setup. It had let me confirm just a minute. It had something. It had a change of character. I don't remember if you can remember it. It was on gold.
Okay.
Yeah, the point where you placed the change of character, depending on me on how the small information I have, I consider a change of character after the sweep of either of the two sides, the low and the high. But on your change of character, I only see you picked the chalk when it swept the high of the gold. So I was like asking, what consideration do you take when picking change of character, the chalk?
Okay, so let me go to that pair. Let's see
Yeah,
if we still have. All right, so this is the analysis you're talking about, right?
yeah,
Okay, so this change of character is what you're talking about, right?
yes.
All right, so what I was paying attention to is actually the entire structure. What do we see when we observe the full structure? We see we had this, all right? So we had a break of structure from here, and price
Yeah.
returned into the range, which if you observe, sorry, I had a network interference. So can you hear me now?
Yes.
Okay, so back to what I was saying. So I was observing the structure and I understood that this was within discount. So this is a valid mitigation. So this became the new low, which we would be having this. Sorry. right? So we have this. And this guy never broke any structure. So we're expecting him to mitigate something within this count of this range from this low to this high. And within this range, where is the liquidity? We see we have this full range as this. Sorry. We have the range as this. We have this swing low as this. This swing low was right there because it cleared liquidity and broke structure, right? So this is a swing low. So within the structure of this range, we would have something like this. So this would be an internal range liquidity because it's a swing high, low, resting within our range after the intentions of the range has been completed, which was actually the analysis which I sent to you guys. Now, as this liquidity has been cleared, what do we see? We see price cleared the liquidity and broke structure, which is actually my criteria for a change of character. If we do have something like this as an uptrend, let's say the higher time frame is looking bullish, and price returns into a POI, and then breaks structure, that becomes a change of character. My attention goes into the range within, that particular point. If it happens that price doesn't return to mitigate my POI and goes to clear out the weak high, I then still wait for price within this zone and expect price to clear the internal range of this newly formed range and expect a reaction like this. Okay, so now having something similar to what's happening here, we now have this POI. Now we have a change of character as well. This becomes a POI for observation, and this would be an internal range structure as an inducement once price clears out this week high. Right, so now this would become a waiting point as well to observe price to go back up. So my criteria for a change of character is basically when price clears structure, clears the week high, which is the structure, the opposite direction of the trend, and then breaks structure, which is stopping out the strong low, which cleared out the week high, giving us a newly formed strong high. All right, so that would be something like this. And what do we expect? This is a change of character. Structure has shifted. We want to say something like this. But since structure never did that, what do we expect? We want to say this. All right, because that is what structure is doing, and structure is currently bullish. So we want to see more upside as long as we don't have a change of character. So my criteria for a change of character is mainly a liquidity hunt and a break of structure at the direction of the trend. It can also be at the opposite direction, just matters which point of the range are you in. Are you in discounts or premium? So you know when to look for sales and when to look for buys. Okay?
Yeah.
All right. So next person. Anyone with one final question before we end the section for today? Don't worry, I'm going to be posting the recording on the YouTube channel, and any of you who wants to watch that or who missed any part of the section could actually watch that on the YouTube channel. And also, this is just a peek of how we would be having to spend time together on the bootcamp, which I'm hosting, and I won't be alone. All right, so I'll be having other mentors on it as well, which would also be taking questions and also sharing some knowledge with you all. So if you would like to register for that bootcamp, do contact me. My contact is in the free channel, which I'll be sharing at the description of the YouTube video. Okay, so you can contact me, and we would have you fixed for that. Okay, so one last question. We have Juicy FX about to unmute you, so you could ask your question. Okay. All right, Juicy, you're up. What's your question? Juicy, you're up. You can unmute yourself and ask the question, okay? All right, so any other person?
Okay.
One final question.
Yeah. I'm here. I'm here.
All right. So how are you
I'm
doing?
Juicy. I'm good, boss. I'm Juicy Black from Nigeria, sir.
Nice to meet
Yeah.
you, bro.
So
So what's the question?
yeah, yes. So my question is, how do you pick your entry models? Like, how do you pick your entries, and what type of entry models do you use?
Well, mainly I have just these three, which I shared with you guys at the beginning of the video. Um, my entry models. Sorry, about to meet you now. All right, so I have few of them on the lower time frame. I want to see something like this. This is my model from a POY because I want to see this too. All right, so I have this as my demand or supply zone. Okay, sometimes we can have this doing more like a stop hunt before a break of structure. But then these are the two kinds of POY I have: either a stop hunt before a break of structure or just a plain POY with, but they both have to have an inducement resting below them. Okay, so this is my pattern or my model for a POY using SMC, strictly using SMC. Now, what I want to see on my entry model, which is price mitigating my POY, right? And you're giving me a reaction. So what do I want to see at this point? I basically have few patterns, but this have to go in line with liquidity because one, you have to understand that I trade using liquidity, right? So if I want to have an entry model, I have to have an entry model based on liquidity. So one, we have the stop hunt, and the break of structure. Like repeating the same thing, when price gets to your POY on the lower time frame, which is I want to see this coming again, which is price doing this at my POY, a change of character, forming my inducements, and then reaction. So this is one, all right, and I want to see a proper price action forming at the low, which is more like a cause. Then I'm expecting the effect once price mitigates my POY. So this is one, which is one of the best actually. It's an SMC, one of the best. If your POY is correct, then this would have to be correct. Secondly, we have the breaker block, which is more like this. Then price break structure, and then does something like this at this point. So what do we see? I see a breaker point and also a fair value gap. So price could do something like this, but 90% of the time, price actually returns into the breaker block before going back down. So this is another entry model. If this is coming from your POY, let's say we have a POY right here. Right, so we see the stop hunt, and then we had the break of structure, right? But then price is actually creating an inducement close to your breaker block. So this brings my attention to the breaker block, and I look for an entry from this point. Okay, and another one which is not that popular, I don't really see this most of the time, is let's say we have a POY. Okay, we see price forming like a 3D. I don't know, it's been long I use this term, but I do still pay attention for this kind of patterns as well. We see a proper order flow of price moving into a POY, and then we see some kind of on the third touch of the trend line, price goes back down to break structure. Now this actually still forms a QMX or a QMC, whichever you want to call it, which is the trend line in line with our POY. While at the same time we have a break of structure, which is like a breakout. This is more like a little bit of SMC on retail, you know what I mean? So using that, what you see now, you want to pay attention to this point, which is more like a QM now. If you pay attention to this, you'll see it looks more like a QM on that point, right? So now you have a QM, a breakout, and also a trend line confirmation within a demand or a supply zone. You can turn this whole scenario around and get yourself a good, bullish QMC pattern. Right, so now what I want to see next is something like this, which is price forming a new QM from this same point. Right, but most of the time, since it's a lower time frame structure, sometimes we see stuff like this. A single candle returning to mitigate this or going back down. Right, sometimes we see something like this, but it returns back 100% to mitigate this particular point. Right, so let me give you some of this on the live chat. Let's see if we can find some of these entry models on the live chat before we call it a day, okay? So now let's pay attention to this point and see if we find any entry model of such in the lower time frame. From this point, let's do one as a counter trend. So let's say this point. Let's find another from which points, this, this, which one? Okay, let's say this point. All right, so let's go to the first, let's say this guy, the red one. On the 15-minute time frame, let's say we find an entry model for that. So now we see we have a POI. Remember what I told you guys, the inducement, right? So we have this guy as liquidity. If you're wondering why I'm calling that liquidity, you see an obvious order block just lying right there. No manipulation, no nothing, just an obvious order block resting right there. That's a trap. Okay, so that will be used as liquidity. Look for anything resting above it. Right, on this guy, what do we see? We're closer to a breaker block, right? But at the same time, we see an IPA candle, which is right here. Okay, so you can also refine down to the hidden base if you want, maybe something like this. You see? You can also refine to this. You can also pick the entire IPA candle, whichever way you want. Okay, so this is our POI, and this is our inducement, just below our POI. So this guy meets the criteria for a POI, right? So now we want to see if we had any entry pattern on this. You can still see. Let me delete this now since we're about to play that. If you are paying attention for a breakout, which is like a change of character, we would have this. Because one, this was the high, which created this low. Bullish structure, turn bearish. What do we expect? I expect price to return into premium of this range. Right? So now on the lower time frame of that range, okay, here we go. The lower time frame of this range, where is the liquidity within this point? From this high to this low. Every other thing below it is not important, okay? That is discount. But we are within premium because we're looking for sales. So what do we see? What's the order flow? What do we see here? Resuming properly. Let me take this out. Can't go lower to the 1 minute time frame because this is not premium, so I will get cut out. But right here, what do we see? We see we have a break of structure here, right? And then we had this POI 1, that's a POI 1 being induced by this guy. Okay, so and then we had a break of structure again. And what do we have? We have this IPA candle. Hidden base will be this guy. Right? But then if that's not our point of interest, we'll have the 4 IPA candle. And this would have been our mitigation. So this would have been our entry. This guy right here. With our SL, we're still at this point. Okay, where would our TP be? What is within discount? What is within discount? This is discount. This is liquidity. We have this guy right here. But liquidity was above it, right? But at the same time, this is a strong low, right? Because it cleared the high which created it, right? So we'll have internal range liquidity resting within this. So we have liquidity and we're expecting reactions. But at the same time, we know this is a weak low because on the higher time frame, which we're observing from our POI, let's say, okay, let's go down to the 2 hours or the 1 hour. Okay, observing from our POI, this would be liquidity, right? And at the same time, we had a retest of that same point. Because now, if you look at the 5 minute time frame, we had a break of structure here. So this becomes internal range liquidity because these are all internal range lows and internal range highs, sorry, of this structure. We had a break of structure here, and price formed this internal range highs, liquidity. So we still had a retest at that same point. Okay, but all this has to play down to the lower time frame structure. All right, but this is not a clean entry. It's kind of like stressful, but you all know we have a seasonal period. So this is kind of like a holiday period. Looking for a clean setup won't be that easy. But this would have been a clean trade from this particular point if we were to be trading from that. Okay, so that would have been the entry, probably the entry which I'll be paying attention to. Okay, so let's go over to this guy. Looks nice on the higher time frame. But let's go back to this guy and see if we find another entry at this point. Okay, so now let's map out the structure from the higher time frame. If you don't pay attention, you're going to get lost. And so please try to pay attention. We see this swing high, came back down, failed to break the low, went back up, then from this low. So let's go to the 30-minute structure and see what we'll find there. So I'm running out of time. So this would have to just scan just this analysis, and then I would have to leave. Okay, so I'm running out of time. So what do we see? We see fail to clear the low, change of character here. Internal range liquidity here. POY within this range. Within this, whichever it wants to be, because for me, I would have picked this. But I don't do that, much refining, so probably would have done more of this. 100% sure I would have done something like this instead, and then had my TP at this point. Okay, so this would have been my entry model at this particular point of this same range, because you can see the change of character from here, and all those stuff. All right, so that's all for today. I don't have much time anymore. My battery is ringing. We're going to get shut down anytime soon. So I hope we do this some other time. And if you would like to have more of this for 5 days, you can join the bootcamp. The registration is still on. We have just 6 more days to go, and we will be live on the bootcamp. So if you would like to join that, you could contact me at RealJFX, okay? So this will be all for today, and I will see you all next year on the next live section, okay? Have a nice day, y'all.